Good.
I've seen you're back in the gym.
I've been back in the gym since it opened. Deadlifting, squatting, everything.
So you had a 6-month hiatus.
6-month hiatus, and I probably gained about 10 kilos in weight.
So
in a bad way.
for anyone that doesn't know, if your neighbourhood feels like there's an earthquake but there's no earthquake, it's probably you're deadlifting in a gym nearby.
Well, yeah, more like a kitten lifting weight. But well, since taking 6 months out. But yeah, otherwise been in the gym, been lifting heavy and feeling good, to be honest.
Awesome. What the hell are we doing? Like episode 1. What is this?
Well, it's a good question. I don't really know the answer myself, but I think what we're trying to do is create a podcast about tech and tech investing at the highest level. What do you think this is about?
So think of an umbrella. On the umbrella it says tech. Underneath the umbrella it says building tech and investing in tech. So anything and everything to do with that we basically cover. Some podcasts will be just me and you, just riffing, talking about what's going on, what we've learned, what we're seeing in the markets, our own expertise, and also we're doing it to learn ourselves as well and share it with the everyday person, whether you're an expert investor in the markets for the last 30 years, we hope it appeals to you, and whether you're a new sort of intern 18-year-old going into the markets, we hope it also appeals to you. So it's for everyone. The best way you put it the other day is when these really intellectual people go onto Joe Rogan's podcast, for example, let's say Eric Weinstein, super intellectual guy, but he has to dumb himself down on Joe Rogan's podcast so it appeals to the everyday person. But at the same time, it's not just for the average Joe. Intellectuals still listen to that episode.
Well, we'd hope.
Yeah, well, the ones that I speak to and I know of, and I always ask them, what do you think of this? They're all listening to those episodes. Not every Joe Rogan episode, of course, but those episodes with the intellectuals and those who have something useful to share. So we hope it appeals to everyone. And yeah, so...
Well, before we move on, there's one more thing we're going to do on this podcast as well, which I'm going to take the piss out of you for wearing gilets like that. But anyway, continue.
Yeah, this, look, the autumn's kicked in here.
It's got to be 21 degrees in here and he's wearing a vest. I love it.
So it is what it is. Listen, when you're South Persian in your jeans,
yeah, it is the immigrant jeans. Yeah, definitely.
It's needed. So I think before we dive in and before I ask like what the hell even warrants you to talk about this stuff, 2 other things to note. One of the reasons I planned on doing this podcast and with you, one of the reasons is I'd like to think, but there's a lot of things I'm not good at, but one thing I'd like to think I'm good at is podcast experience. So I've helped a few startups launch their podcasts in the past we're in 2020 now. Since 2016, I've helped other brands, other startups. Some of them have been top charting podcasts. So it's always been a thing where I've always thought about doing my own. But I guess as you mature, you become more rational in the pursuit of rationality every day and logic. I was always thinking of doing one, and when the idea finally hit, and when it hits, you're like, let's do it. We have to do this one. So one, why am I allowed to do this? I have good experience podcasting. Number 2, but actually before I get on to number 2, despite the experience that I do have, I'm not doing the setup in the way that I've done it for the startups. As you can see, this is just we've got one. It's an amateur setup.
It's amateur, but it's kind
because it's like we might be hanging out, we might be riffing, and I'm like, cool, we're gonna smack this here. Let's record.
Exactly.
Let's get 1 or 2 lights up. Bang the mic in the middle. Let's record. But look, as things scale, who knows? But I always like to keep things organic, authentic. I don't want to be in a large fancy studio, very formal, in a corporate boardroom sitting like this. Just, it is what it is. That's the first thing. Number 2, how this podcast is different from other tech investing podcasts. I didn't want to, initially I said, Iman, how about Rational VC? We were both like, that's the name. And then after a while I said, no, because there are already other VC podcasts, even though that's not all we're covering. But then we agreed, no, actually, it's the best name, and you might want to explain a bit why.
Well, let's start with the two elephants in the room. These two guys. So you're probably a bigger inspiration to you than they are to me. But fundamentally, two of the most rational guys you can meet only invest in things you understand, right? So what are we talking about when we talk about rationality? For me, there are people interpret rationality in different ways, but the reason we chose the name is because if you read books like Taleb's Skin in the Game, what he says is rationality is the thing that allows for survival. So rationality, in a sense, is risk management. The conversations you and I have had till bloody 4 a.m. talking about what does venture look like, what is tech, why are valuations so high, a lot of that is not really risk management. A lot of that is throwing darts at a dartboard and hoping some of them stick. But maybe we don't understand the market well enough. So I think why we've called it Rational VC is because, well, we want to take a rational lens and try to understand the market, try to understand public markets, venture, PE, whatever the financial instrument area is, try to understand it from a rational quote-unquote lens. I think the name doesn't limit us. I think we're quite open with that, and I hope we can chat
oxymoron.
About. Well, somewhat of an oxymoron, but fundamentally, look, it is what it is, and we think it's a catchy name, and I think it does reflect what we're going to be talking about.
Yeah, and talking about these two guys. So for anyone listening and not watching, I have two humongous portraits of Buffett and Munger here on the wall. Look, I'm a fan of Buffett, I like him, but really I only took this one because I got the Munger portrait and they sent this one alongside it.
Oh yeah.
I like Buffett, but listen, everyone knows I'm probably Munger's biggest fanboy. I was really looking forward to going to the Berkshire Hathaway annual meeting this year, but obviously COVID. I hope he lives to at least 500 years of age.
How old is he now? 120?
He's 96.
Yeah, he looks it.
Anyway, so before we get on to what warrants us to talk about this stuff and just talk about our backgrounds, this is an introductory episode. The last thing I want to say before we dive into your background is how this is different from other podcasts. Look, there are lots of other VC podcasts, especially in the last few months. Many of them have launched. We've probably been discussing this for way longer than that, and we've been slow to move because we've been super busy.
No, blame it on COVID. It's fine.
Always. But how it's different from the other, I don't know, I'd say there's probably 5 other top VC podcasts, and I listen to a lot of them. I respect all those guys highly. Nothing against them, and I think they're doing an amazing job, and I'll continue to listen to them. We're different in the sense that we don't just cover VC landscape. We don't just cover the early stage or the angel investing or the seed investing, generally Series A to B rounds, VC and all of that. We also cover larger tech, public market tech investing, private equity, distress, turnaround, restructuring, essentially building and investing in tech at any and every stage. Anything to do with building and investing in tech, whether it's building in a garage all the way to doing an IPO and beyond. So that's what this is. Look, we're not perfect. Look, as we go along, I'm sure we may pivot after 50 or 100 episodes. Who knows what the future holds? But as we start out, this is pretty much the plan. What the hell warrants you to talk about this stuff? Why should anyone listen? Because economics, incentives, when I listen to podcasts, there are some podcasts I listen to, let's say in philosophy or whatever genre, after 2 minutes I've switched it off, like already put me to sleep, or it's not useful. Why should people care? Why should people listen to you? And then I'll discuss my background.
Well, I'll leave it up to people to make a decision whether they should listen to me or not. But I think what my background is I've been 5 years now as a strategy consultant, but my focus while being a strategist has been tech companies, tech valuations, all of that stuff. And the specific sort of area that I've been focused on has been energy. So in essence, when people ask me what do I do, I like to say I'm changing the world. Because I truly believe I am changing the world at some level. But yeah, so I work with a lot of energy retail companies, energy tech companies, larger scale companies that are looking to pivot into the energy tech space, the large oil and gas majors that are also doing this, utilities, you name it, we work with them. And the things that I've learned along the way are, from a front office and a back office perspective, how do the big guys, the people that are IPOing and even beyond that, people that have massive shareholders, how are they thinking about that tech and how are they pivoting their businesses for tech? And then how are the smaller players thinking about integrating tech as a core part of their product to enable them to win in the market and do what they do best. I've taken, I think, 2 or 3 startups to market now, one of them with a very heavy energy focus, and taking them to market and understanding all the steps that are involved in the financing and the strategizing and the winning customers and all of that crap. It's so important to have experienced it before you talk about it. And I hope that I can learn along this journey and get more information and kind of spew that information back, but also use that basis that I've built over the last few years to kind of aid me in that conversation.
So from startups all the way up to larger corporates you've helped with go-to-market, fundraising, strategy, and essentially a lot of that which leads into pricing and growth and things like that. And in essence, some of the consulting you've done as well has been around product management and the products they work on.
Yeah, 100%. I mean, we look at products in quite a lot of detail, given that nowadays in tech, product is probably the most important thing, right? You build a strategy around the product that you've got because the product gives you your advantage. But then on the other side of it, I mean, we do tech diligences as well, right? So we do due diligence. It's very intense, but like, you learn about a business in like 3 weeks. Yeah. So you learn from the technical side around how they manage their product and how you take a product to market and all that stuff and test that. And then you also look at it from the lens of, okay, strategically, how is this business set up? Is the valuation right? Are their revenue forecasts right? Are their costs estimates right going forward? And you kind of build a value based on your diligence.
Yeah. Am I allowed to name drop just your background?
Yeah, go for it.
So, because you're underselling yourself here. So, Iman studied economics at the LSE in London, and then you went into management consulting at PwC. But what happened is in PwC, if you're very talented, let's say that you're the top 1%, 1 out of every 100 people, they get bumped up from PwC to Strategy and, which is a subsidiary of PwC.
Kind of.
See, this is what I like to gas my friends up.
Well, he's taken it over the line there. But no, I studied economics and politics at LSE, and then after that went into consulting at PwC. I actually worked in a deals practice and did a whole bunch of stuff outside of consulting as well, and then kind of pivoted, if you will, into the strategy and business, which is the strategy consulting arm. We like to think of ourselves as amongst the smarter of the lot, but that's not necessarily true. But yeah, I agree. I mean, it's a struggle to get into that part of the business, and I'm glad I did it because I've learned a shit ton since.
Awesome. So my background, just I'm going to see how long we've been recording here. We promised the first episode wouldn't go on for too long because we're keeping all the exciting stuff for episodes coming up. My background, I'll go way back. I'll try and be quick. I usually put people to sleep. So I'm an immigrant, came to the UK at age of 5, studied in not so great schooling, managed to break into a relatively good uni, Russell Group, did econ, got a scholarship to stay on, do a master's in finance, went into investment banking. I was working at the 3rd largest German bank who no one's ever heard of, KfW,
project finance,
for a year, doing leverage finance, project finance, and those deals. And while I was there, I had a few offers to join larger sort of the usual blue chip names in banking or finance on a full-time grad scheme to transfer over, and I turned them all down. And everyone at the time said to me, "You're absolutely crazy."
I didn't say that.
You didn't say that. A few people did. And the reason was because Silicon Valley Bank, who especially a lot of our American listeners would probably know of, is very large in the US, established, I think now part of the S&P 500, 4,000 employees, 30 offices, really large. Really established in the US, but they had just got their London license for banking in 2012. This was 2015. The acceptance rate to do like an internship was super difficult. It was like 0.8%, and I had just applied just for fun. So when they got back and I went through the process and they took me on, I was like, great, I'm dropping everything else, because other roles, I've got friends in some of these other roles, and look, with all due respect, if you're sitting in like a big bulge bracket bank or whatever, you're just a cog in a wheel. You're just pigeonholed into just doing Excel and Dex all day and night. Whereas this was an opportunity, it was very entrepreneurial. You're literally helping launch a new team in a new region. So I eventually was one of 3 founding members of the corporate finance team. I was the youngest and most junior one, really scrappy, as the tech bros like to say, quote unquote, really on the ground. And it was a phenomenal journey. I love those guys. It was an amazing role. So to unwrap that really quickly, what did I do in that role? Everything from origination, which is banking's fancy term for biz dev, to actually executing the transactions, structuring the transactions, doing all the financial modeling, due diligence, term sheet negotiations, legal,
all the boring stuff.
Negotiating 400-page legal documents. And these were all tech companies, of course, as the name suggests, Silicon Valley Bank. So I was primarily working with software and fintech, and also consumer internet, so e-commerce.
Can you name some of the companies you worked with at the time?
I can. Just before I forget, aside from corporate finance, because it was an office of, when I joined, we were 80 people on the floor. Now the London office is, I think, around 400 people. Oh. They just put a Reuters article came out the other day. They're hiring another 80 despite the pandemic. So they're always scaling aggressively, given the sector that they serve. And aside from corporate finance, I got pulled into all sorts of other teams and deals. Of course, I did leverage finance, given my background there, and I did venture and growth as well, which is venture debt. And I've also advised some companies in that sort of avenue since I left banking. Companies I sort of worked with, ones I can probably name. When I joined, we started looking at the Hut Group. So for American listeners who don't know who the Hut Group is, they own multiple, they're sort of a holding company of multiple online e-commerce brands. The most notable one being MyProtein. As a young gym bro in uni, since 2010, I think it was, I was chugging down their whey protein.
If you were looking at their revenue line, I'd probably make up about 1/5 of that revenue, given the amount of shit I bought from them over the years.
Probably. So yeah, when I joined, I was super excited about that. I helped finance a lot of their acquisitions. The other day, actually, they announced they did an IPO, and I think it was the second largest ever tech IPO in the UK. So congrats to those guys. They're a super impressive management team, and yeah, it was super fun helping finance their acquisitions. Aside from the Hut Group, Huel, which is also another supplement brand, online e-commerce.
Meal replacement. Right?
Yeah. It's somewhat of a meal replacement. And then when we were looking at that, everyone kept saying, because everyone in the bank knew, they're like, we know you like SaaS, we know you like this other stuff, but whenever some of these millennial e-commerce deals hits, you're super excited about it. Why? And it's like, because I use these. Like there was a dating app company, there was an e-commerce company. It's like, these are products either me or my friends were using. So I'm, again, going back to tech bro world, I'm on the ground, my ears are on the streets, I can see and hear what's going on. But yeah, Huel hit, and when Huel hit the desk, we were looking at it, everyone said, what else are you excited about? Like in the market, what do you see that you like? I was like, Gymshark. This was like 2016, 17. And I kept saying Gymshark. I think actually someone told me after I left that I think they'd actually been introduced to that company. And everyone at the time, a few people told me, you don't like these companies, you don't know anything. Like, why would you say Gymshark? And the other day, of course, you heard they sold 20% of their stake for, I can't remember how much it was. I think it was 200-300 million pounds. It's now essentially Gymshark, which started by Ben Francis and Lewis Morgan in 2012. Ben Francis was a Pizza Hut delivery driver whilst at uni. He started making and selling t-shirts online on the side 8 years ago. Now it's worth $1.5 billion. So I would like to think I usually have the vision for when something's going to take off. I said the same about, I was a bit late to the game, but told a lot of family and friends in my own portfolio, Amazon and Facebook stock. Amazon I got on in 2016. I'm very upset that I didn't years before that, but hey, you live and you learn.
You're still winning.
Hey, but yeah, so, and then aside from, the reason I've mentioned those clients is because they're the names that the average person will probably have heard of, their consumer brand. but I worked with a ton of software companies, SaaS, fintech, and essentially I was just dealing with anything and everything software, fintech and e-commerce in European landscape.
What have you done since then?
So left that role in 2018. Why? Because I guess a few reasons. It was phenomenal growth because we built a team. It was still growing with crazy amounts, but the rates that I'm used to, I like to build and then go on to the next thing and build and go on to the next thing. So I like to scale. I like to be a scaler, you could say. And I just wanted I wanted a new challenge. So the usual exit route for me, and you may remember this, but I was getting hit up by headhunters to go speak here, speak to this company. The exit path would have been growth equity investor, sort of join a fund, VC, PE, some PEs, or just go and be an operator in tech. And I wanted to be an operator. No disrespect to anyone who becomes a VC at a young age, but I feel like the world of 3 years McKinsey, 2 years Harvard MBA, box checking as Chamath says, and then you go on to be a VC. It's like, bro, I hope it works out.
I shouldn't go into VC then.
I hope it works.
Forget the MBA.
I hope it works out for you, and it does for some of them. Some of them genuinely have the intellect and the knack and the talent for doing that work, but a lot of them are doing that because it's the box checking path of life, and it's the new hot thing where all the MBAs are, all the memes on Twitter and amongst the tech bros and the Twitter sphere of all the MBAs and their cold outreach for trying to break into interns as VCs or whatever this summer. I didn't want to do that. I feel like, look, if you want to be a good VC, you've got to be a phenomenal operator for, let's say, a decade or two. Yes, there are some who they're in their mid-20s, but they've been building since their mid-teens and they've done an exit. They have the right to do so. So I feel like, look, I want to be an operator, and I'm happiest, and at the end of the day, going back to basics, I want to enjoy what I do as well. I enjoy building. So I dabbled in a number of startups basically. I wanted to taste. I said, look, when I left banking, I was 26. I want to taste. Dabbled in blockchain, in product management, helped launch a product for one of London's, it was Europe's first fintech platform for trading digital assets, helped launch a product there. I advised a couple of startups. And I also did a prop tech / property company, which was a co-living company. I still hold some of the portfolio, unfortunately, of co-living. You've heard me moan about this a million times. Why I don't like property, we'll discuss prop tech in another episode. Me and you will interview prop tech experts. I really got out of most of it because I don't like property. But I dabble in fintech, prop tech, a number of other things. And then I was like, okay, I was speaking to a guy I went to uni with, a really smart technical background, and he was providing the technical expertise for me to launch a growth marketing business. So in 2010, they used to call it growth hacking. In 2019, they call it product-led growth. I'm making lots of funny faces for those who are listening. Basically, first 3 months scaled super aggressively. We were providing growth subscription services to e-commerce companies. So data-driven, paid traffic, looking to scale online. It's something I wouldn't say I dislike, but it's funny now because how my perspective has changed now that I'm out of it. I read a statistic, 40% of startups, 40% of their income or their funding or whatever it was, someone's gonna fix what I said here, but 40% of that goes towards paid traffic because of their inorganic methods of growth, which I'm not a huge fan of.
Well, companies today are all basically based and measured off customer growth.
Some have negative gross margins.
Exactly. Well, no, some. I'd say the majority have negative gross margins. Well, gross margins maybe not, because a tech company, as a SaaS company, you've got to hit about the 80% mark. But generally speaking, net margins are always negative, at least for the first 5 years until you raise some capital. So yeah, I totally get that.
So essentially, as much as now I'm not a huge fan of it, but last year I was, and a lot of these large sort of VC-backed e-commerce companies were paying me. Grew tremendously, hired a team, we did really well. And then after a few months, I was like, fine, and I was discussing it with the technical guy who I pretty much founded the business with, and he was providing the technical back support on the site. I was like, look, the only way to scale this is we just keep hiring more people. That's exhausting. I don't want a business like that. And also, this is a bit more of a lifestyle business. It's not a business where, again, another person we both geek over is Naval, because he talks about, how using leverage, being scalable, etc. I like software, and I was like, look, we need to automate some of this, make it more scalable. Did that, and then after a while, I was like, fine, I've tasted what I like, tasted what I don't like. It went well. It didn't go tremendously well, but it didn't go poorly either. And let's just say, at a good time in the midst of COVID, I did a small exit. I sold my stake, and why? 2 reasons. I want to become really good at product management. I'm doing that right now on the side with a few startups. Maybe in future episodes I'll name drop some. They're doing really impressive things. Some are VC backed, some soon will be. So now I'm just dabbling. I'm advising some startups, and I'm learning to code, which is it's a surprise. When I was doing our website for Rational VC, I said to you, I was like, look, I'm still an amateur, but I'm using Squarespace. But in Squarespace, you have these code blocks, and I was like, Jesus, even though I'm using a no-code tool, it's still so tiny. You have to I'm a perfectionist, so moving this here and moving that there, and I was like, I have huge admiration for engineers. I've been on the sort of commercial side, biz dev and product and all of that stuff for years, and I'm always looking to improve those. But I said, look, as Scott Adams says, you want to add further things to your skill stack. And am I really going to be the top 1% of product managers in the world, or the top 1% of biz dev in Silicon Valley or in the tech space? Probably not. Am I in the top 25%? For sure, you're damn right I am. Can I become a top 25% engineer? It's going to be tough, but with a hell of a lot of work, I probably can. I believe in myself, I know I can. So when you gel the top 25% of both worlds, then you become as Naval says, learn to build, learn to sell. It's a long-term game. I'm a lot of people, I feel like, and I want to hear your thoughts on this, I've been rambling on for too long now, but a lot of people our age have the wrong impression. The whole reason we're doing this podcast is because everyone is in it literally now just for the money. Yeah. Not to make an impact, not to make change, which, going back to Chamath's point, he's saying, look, if it takes 10 years, work on something that will impact the world, that will benefit the world. Ego is the enemy, as Ryan Holiday says. Most people want the credential status, flashy nonsense, but again, I don't know where I'm trying to get with this point. I'm rambling on now.
No, but it makes sense. You're getting onto the point that Naval says about specific knowledge. So you're saying, let me become, and he builds on the Scott Adams point. But find 3 or 4 things that you're really good at, or that you're in the top 25% at. Gel them together in one way or another, and then you've got yourself in the top 1% of that specific thing, that triangulation of that thing. So for you, from what I'm hearing, is you want to build. So that's one of the things, and you want to get a top 25% of that. You love tech. Okay, specific type of tech, in particular. What is that? Okay, figure that out. Get to the top 25% of that, and then media. Putting your voice out there and building your brand, building your image, but also getting people to understand where you're coming from in long form video, long form podcasts. So bringing those things together, we've kind of got to a little position already of a triangulation of, all right, let me do a podcast about building and about tech. So you're building that specific knowledge as you go along, I guess. Yeah, look,
I would like to think I'm very good at selling. I have experience in media, but code and building not so much, which is what I'm developing, and I'm looking at the long-term game. Me and you know a hell of a lot, but there's also a hell of a lot we don't know.
There's more we don't know than we do.
Exactly. Yeah. And that's the whole purpose of this podcast, is for us to share the bits that we do know, but more importantly, learn as we go along and share that journey with you guys, for you to learn with us. Anything else you want to say before we wrap up this episode that should have ended a while ago and I should have stopped talking a while ago?
I hope the next episode doesn't have you rambling.
For sure. Anything else you want to say?
No, that's it, man. I'm good.
Awesome. So how this is going to go, I don't know. Next few episodes, we're going to riff on more actual tech talk and things that are going on, and not so much about us. This was an introductory episode. We're going to dive into it. And after episode 5, we're planning on, again, it may change, but we're planning on getting guests. Already a few very big names have agreed. Fortunately, me and you benefit from having relatively strong networks that we're always growing. Peace.